In this video, I'm excited to share a super strategy I've been using that puts a ton of cash into your pocket every single month. This super strategy takes the optional strategy, the dividend capture strategy, and cash secure put options and combines them to form a super strategy. And the results, as you're going to see, can be awesome. As always, I'm going to use a real life position I've been in for over 1,000 days to show you how the super strategy works. So we're taking the wheel, the dividend capture, and the cash secure option strategy and leveling them up. So let's take your option trading to the next level. Let's get started. I want to make sure you understand what these three different strategies are individually, and I'll show you how I combine them for a super strategy. To begin the optional strategy, you generally sell cash secure put options against a stock that you feel comfortable owning. If you've been watching my channel for a while, you know I like to do that in companies I believe are at worst fairly valued or even better undervalued. So you're selling these cash secure put options against companies that are undervalued and you're collecting that nice dividend. Well, eventually the thinking is that that cash secure put option will be assigned to you. At that point, you'll own the stock. So at that point, you move on to step number 2. You've bought an undervalued stock. Now, if you didn't want to sell cash secure put options, you can always just skip right to step number 2 here and buy an undervalued stock. But by selling cash secure put options first, you're starting the whole process by collecting cash, which I really like. So now we own stock. And many of the stocks I like to trade in are dividend paying stocks because I'm doing this to get paid. So we own a stock that many times is a dividend paying stock, and then we begin to collect those dividends. Remember I said one of the 3 strategies we're combining here is dividend capture. We're now lined up to begin capturing those dividends. Now you can do this on any stock. It doesn't have to be a dividend paying stock, but generally I like to do this on dividend paying stocks because it adds another level of cash flow. Now my real life trade I'm going to share with you in this video is actually in Realty Income, ticker symbol O. But I want to show you an important aspect of doing this dividend capture portion of the strategy. One reason why I like Realty Income is because it pays a monthly dividend. If I own Realty Income, I get to collect this nice monthly dividend, which is just over 26 cents per share or 5.59% annually. So remember, we started this whole process by selling a cash secure put option. We've then bought the stock at hopefully a discount. We're now collecting this dividend. So we're going to first ignore all that cash we received by selling cash secure put options. We're going to say this dividend, well, that's cash flow number 1. Now let's move on to cash flow number 2. So we own shares of Realty Income, and now we're collecting nice dividends, as you see here at point number 3. Now I move on to a little pipeline here, a little cash flow pipeline. Let's move on to point number 4. And we're going to sell some covered calls against the shares that we own. So we're collecting dividends. Now we're collecting covered call premium. That's kind of how our optional strategy works. Once we own the stock, we sell covered calls against it. But how do we get this super strategy? How do we collect 3 types of cash flow against this one stock? Let's move on to step number 5. We're going to sell additional out of the money cash secured put options. There's a couple things I want to point out here because this can be dangerous or it can be awesome. First, when you sell additional cash secured put options, you want to make sure you understand the risk. You're selling someone insurance. You're selling them the right to put stock into your account. So potentially, although you already own some shares of Realty Income or whatever stock you're trading in, you might end up owning more shares if this isn't managed properly. Now here's a weekly chart of Realty Income. I'm showing this to you for a couple of reasons. The first one here is I want you to realize the risk you're taking when you're selling put options, even in a perceived safe stock like Realty Income. Notice what happened with Realty Income back when COVID hit, back in early 2020. In a matter of just 4 weeks, Realty Income had a big dive in price. It went from around $90 per share to more than cut in half, around $39 per share. That was an over 50% drop in price in just 28 days. No, that doesn't happen very often, but it does happen. You just need to understand the risk you're taking when you're selling additional cash secure put options against a stock, even one like Realty Income that has a proven track record. And by the way, I wanted to share this chart with you because this is the company I'm going to show you all the details where I've been trading in it over the past 1,000 days. And that time frame starts with these little yellow arrows back here on August 19th of 2020, and it goes to present. So just notice it's been trading in a range of around 75 to about 45 during that time. We're going to ignore this little wildness over here in COVID because it did go below it and it was above it. But we're going to focus on the time we owned it, which is right here between August of 2020 and present. Personally, when I use this super strategy on a stock, like I'm going to show you in just a minute, my goal here isn't to have these cash secure put options assigned to me. My goal is just to generate extra cash flow. Another goal I have when I sell these additional cash secure put options is that when I want to adjust that cover call strike price, let's say up, let's say the stock has gone up and I don't want it called away from me. So I want to roll that cover call up. But in order to get it rolled up for a credit, I have to go way out in time, or maybe it's even impossible. Well, that's another reason why I sell cash secure put options against companies like Realty Income, where I'm doing this super strategy. Because by selling these additional cash secure put options, it helps fund rolling those covered calls up as I roll them out. Before I show you all the details of my real life position over the past, I think it's 1,100 days, let's just review this process. Let's review our super strategy. So we sell cash or put options. Eventually we're assigned those shares at hopefully a value that you're really excited to own the stock at. You then, if it's a dividend paying stock, you begin collecting those nice dividends. And if it's a monthly dividend paying stock like Realty Income, well, that's even better. And there are some stocks and ETFs that even pay weekly dividends. You have to decide if that's what you want to do. So we begin collecting that dividend, then we sell covered calls against it. So we have dividends, we have covered call premium, and we add to that by selling additional cash or put options. Now, one more little tip I want to share with you here about item number 5. Let's say you really don't want these additional cash or put options assigned to you. But let's say the position goes against you, and those cash or put options are then in the money. Well, what could you do? Well, you could sell the shares that you own back in here, that you had to buy back in here, and use that capital to allow these to be assigned to you. Now, understand here, you're just replacing one stock for the same stock at another price. So you most likely are taking a loss on this stock. But if you absolutely did not want to own these additional shares and you couldn't adjust this to your liking, well, that might be something you could consider. Just replace these shares with these shares over here that are about to be assigned to you. Now, personally, I can always prevent that from happening. Now, I have a whole video series dedicated to how to repair positions that go against you, which can help prevent this assignment from happening. But I just wanted to drop that little piece of knowledge into your brain because you might need it one day down the road. And here's what my real life position in Realty Income looks like. A couple things I want to point out to you here. This is a summary of all the trades I've done and all the dividends I've collected against Realty Income in my main options trading account over the past 1,464 days. Now keep in mind, I have a personal rule that any one position, including a company like Realty Income, it can only make up at most 5% of my overall portfolio. That means that considering all the cover calls I'm in and all the additional cash or put options I've sold, if those were assigned, that position will make up at most 5% of my portfolio. And as you see here at the bottom, on average, I had sold 3 contracts against Realty Income. So it's only about $20,000 worth of stock. So let me scroll up here and let me just kind of show you what's going on over the past over 1,400 days in this super strategy position with Realty Income. So as you see here, we started back in 2020 by selling cash or put options around the $60 and $65 strike price. Notice back then we were only selling 1, but for most of the rest of the time we were selling 3. Now eventually we had 300 shares assigned to us at $65 per share, and then we began collecting that monthly dividend as you see here in the bold text. It started out back in 2020, it was 23 cents a month. Now I'll scroll down here, you see it went up. It went up to 24 cents per month back in 2021. And I'll scroll down more, you see it went up to 25 cents per month in 22. And then I scroll down a little bit more, you see more closer to present. You see we've been collecting 26 cents per share in 2024. I go down here to the bottom, and you see 26 cents per share was the last one collected in the spring of 24. Now notice that along the way, we're also selling covered calls. And that's this little STOC. That stands for sold to open calls, or in this case, covered calls because we own stock. Now, generally speaking, I was selling those call options at the money or a little out of the money. And sometimes if Realty Income spiked up in price really fast, they were probably in the money. But overall, I wasn't being super aggressive or super conservative by selling those covered calls. And then notice along the way where you see these STOP, that doesn't mean stop. It means sold to open put. So we're also selling those additional cash secure put options against this position. That made up our super strategy. Our 3 strategies in one: dividend capture, covered calls, and cash secure put options. Now, as I scroll down here to the bottom, I want to show with you our overall profit and mention a few things to you down here. So first, how good is this strategy? Well, I mentioned that we've been trading about $20,000 worth of stock in it. Now keep in mind, we haven't done this the entire time. For example, notice these dates here. Notice that from September 16th of 24 until January 2nd of 25, we did 0 trades in Realty Income in my main ops trading account. That's basically about 2 months we didn't collect any premium. That happened several other times over the past 1,400 days with Realty Income. But overall, we're generally in a position in Realty Income to some extent during this time. Even though Realty Income made up less than 5% of my portfolio, in some instances, as little as 1%, we still had a net profit of $10,924. That's the cash we put into our pocket by trading this one super strategy in Realty Income. So what does that mean? What can we have bought with that money? Well, you could have bought a nice vacation or 2 or maybe 3, depending on how extravagant you went. But you could have bought something else with it as well. And I'm going to zoom in here because I think this is kind of important. Notice this light blue little area right in here. Notice we could have spent our $10,924 on. We could have bought 168 shares of Realty Income with that money. Yes, we would have had to pay tax. You could argue, well, you couldn't buy that many shares, but I think you get the point. We could have owned 168 shares of Realty Income at its higher price of $65 per share. We would have owned that just by doing this simple super strategy in Realty Income. So what do you think of my super strategy? What do you think about dividend capture, covered calls, and cash put options? Which one do you like doing? Or do you like doing all three? Do you like doing this super strategy? Is the super strategy I like one that you like as well? Let me know down in the comment section below. Now, I just showed you how you could be using some of that cash flow to buy some Realty Income outright. Well, I want to share with you one other account that I share with my patrons. It's what I call my 10% account. It's where I take at least 10% of the cash flow I receive by selling options in my main account, and I buy shares that I plan to own for a longer time frame. I buy them in companies I believe are undervalued or have good potential to go way up in price. And here you see the shares I own in my 10% outright stock ownership account of Realty Income. Right now I own about 60 shares. And those 60 shares, you know what I'm getting every month? I'm getting that awesome monthly dividend. If you'd like to get an alert whenever I buy stock or sell options, check out the benefits of becoming a patron down at the link in the description below. Now you're probably thinking, Randy, that super strategy sounds pretty cool. I think I want to try it. But where can I find those super cool stocks? Stocks that maybe are undervalued. Maybe they're selling really cheap. Answer that question at the video at the link above and the description below. That video is called The Perfect Option Wheel Stocks, How to Find Them. Until next time, happy investing, and we'll see you again soon.